Today, I'm going to be looking at the Bitcoin market. What has, is, and might happen to Bitcoin's price. I've been asked by a number of different people about this over the last few weeks, and I thought I'd make a quick video about it. Warning, this is not investment advice. This is purely my thoughts put into a video. Firstly, when looking at the market, there are two ways people try and guess what the market will do. The first way is called fundamental analysis. This is the attempt to study everything that can affect the market of a currency or commodity and then trade with that knowledge. The second way is called technical analysis, or shortened for TA. This is the patterns or activities of people from the past and how they trade in the market to try and predict what the price will do. Now, some people will prefer to trade TA or only on fundamental analysis. I prefer a combination of the both. So let's have a look at fundamental analysis. So the first thing with fundamental analysis is that I'm going to look at the market in general. You can see from this graph that the cryptocurrency market in general was worth $830 billion on the 7th of January 2018, and the Bitcoin price was about $14,000 a coin. Currently, the market is sitting at $220 billion, and Bitcoin is about $6,500 a coin. Now, to put that in perspective, the foreign exchange market trades at $5 trillion a single day, and the S&P 500 stocks and shares is currently sitting at $21 trillion at market worth. So you can see cryptocurrency is still a relatively small fish. So what has caused this massive decline? There are a number of different events and reasons, and we'll look at each one specifically. The first is the Asian cryptocurrency market. Now, the cryptocurrency market is Asia pretty much. Majority of the wealth came from there. So the first thing you had was China shutting down the exchanges, Japan and Korea tightening regulations, Korea threatening to shut down exchanges, and India as well shutting down exchanges. This caused a massive amount of investment and capital to move out of the cryptocurrency market. Which moves on to greater regulation and scrutiny also from the Western governments. Everyone was looking at cryptocurrency, looking at the ICOs that were being created, and a lot of people were losing a lot of money. So the regulation and scrutiny is actually a good thing because it will protect us, the investors, in the long term. And then finally, you also have to look at what's happening in the bigger picture. The world economy and stock markets as a whole is increasing. Where Bitcoin was created in the massive crash of 2008. So people are looking for another way to make money. Now that the world economy and stock markets are increasing, people are taking the money out of the sort of riskier cryptocurrencies and putting them back into the stock markets. Talking of stock markets, that brings us nicely onto ETFs. So what is an ETF firstly? So an ETF stands for an exchange traded fund. It is a fund that is traded on the stock exchange. There are numerous ETFs on stock exchanges around the world. Each ETF will either specialize in a single asset such as stocks, bonds, futures, precious metals, even property, or it will trade multiple assets within that one fund. So how does an ETF work? So let's look at this example here. This is an ETF that specializes in gold, and we'll call it ETF Gold. This ETF will go and buy $100 million worth of gold. It will then list on a stock exchange and sell approximately 10,000 shares at $10,000 per share. That gives you your 100 million. So now if I go and buy one share from this ETF, I will now indirectly own $10,000 worth of gold. It's important to note that you don't actually own this gold, but just indirectly own it. Why would you do it? Well, it's easier to buy and share an ETF set up for this with gold than it is to actually go and physically buy the gold, have to find a vault to store it as such. So moving along with this, say now gold is currently trading at $1,000 an ounce and the price increases to $1,500 an ounce. There's two ways myself as the investor with that one share can make money. One, the ETF will sell some of its gold and split the profit with everyone who owns a share in that ETF. Or secondly, I can go back to the stock exchange and sell my one ETF share for $15,000 because that's what its underlying worth is, and I can make money that way. So what does this all have to do with Bitcoin? So there's been a number of chats and a number of talk about a number of different Bitcoin ETFs that are currently trying to go through approval. There are currently 10 at the moment, but the main one to talk about is the VanEck and SolidX ETF. Why is that? Well, unlike the other 9 ETFs, the VanEck and SolidX ETF will be the only ETF that is actually going to purchase and hold actual Bitcoins. Secondly, it's the size of the ETF that is going to be huge. They're currently looking to sell a share in this ETF at $200,000 a share. Now, if they sell 1,000 shares, that's an extra $200 million being injected into the market. Interestingly, though, the last time the crypto market total cap was at $400 million, Bitcoin was trading at $10,000 a coin. So what's the wait? Currently, all the ETFs are waiting for the US SEC to approve the ETFs to go onto the stock exchange. Now, with the VanEck and SolidX ETF, it has been delayed twice, with a final ruling to be expected on the 24th of February 2019. The SEC cannot delay this decision anymore. It has to either approve or decline the ETF. So to sum up then, the fundamental analysis summary. Firstly, the Asian markets are a big factor in the cryptocurrencies. What happens there will affect the market. So we need to keep an eye on the Koreans, the Japanese, the Chinese, but also the Indians. The India, at the moment, there's currently a court case going through to overturn the cryptocurrency exchange ban that is in place in India at the moment. If that comes through, expect a jump in cryptocurrencies across the world. Secondly, you got the Bitcoin ETF. Approval or rejection on 24th of February. If that gets improved, expect a massive jump in cryptocurrency price jump. So personally for me, long-term looking at fundamental analysis, I think Bitcoin price will currently either stay where it is or might even drop a bit down to the $5,000, $5,500 price. So that's fundamental analysis. Now let's have a look at the technical analysis and what that is saying. Technical analysis is a very subjective subject. Anyone doing TA will inevitably bring their own personal bias into it. Let me show you what I mean by this. This is looking at the Bitcoin versus Euro chart 1 day zoomed in. So for this, we're going to look at this bright green line here and this dark red line here. So this dark red line indicates a zone of resistance. That means the price is struggling to get above it. This light green line here indicates a zone of support, meaning that the price is not going below that. So now looking at this, I can see the price has hit the support line in 3 places: here, here, and here. Now this pattern we call an ascending triangle pattern, and this is indicated by the by the higher low prices, i.e. where it's hit this green line. Now this is technically or historically a very good buy indication, because this means that people are buying more than they're selling. So if I were to just look at this alone, I would say buy Bitcoin. Now, if I zoom out a little bit, I've now what's called a symmetrical triangle, using this line here to note where the previous high price has been, and this line where the low prices have been. Now, a symmetrical triangle means the price can either go up or can go down. So this would be either a buy or sell signal with no clear indication until the price convincingly crosses this line here or this green line here. Now with these resistance and support lines, it's important to note that these are not actual prices, that they're more of an area as such. So the price has to go through it in order to, and convincingly, for it to be a good buy or sell signal. So now if I zoom out even further and take in the earlier years high prices and low prices, you'll see what is created is what is known as a descending triangle. So now this descending triangle, A, it is a sell signal, and B, made out a base of support where the low prices have hit and rebounded off, and it's an area of resistance where the high prices have failed to break through. And you can see from this that the high prices have failed in 5 key areas. And every time a high price rebounds off an area of resistance line becomes stronger, if that makes sense. So you can see how one chart and looking at it 3 different timescales gives you 3 completely different answers. So the important thing for me looking at this chart and what I'm planning to do personally is, firstly, this ascending triangle, I want to see what happens with it round about the 10th to the 20th of October, because the ascending triangle is hitting this level of resistance here. If it breaks through that resistance, expect the price to rise. How far is anyone's guess, but I would expect to at least this €6,500 mark. That will be the next level of resistance, and if it breaks through that, expect the price to continue increasing. So in summary then, looking purely at the fundamental analysis then, it looks like the price will most likely decline or remain roughly the same unless something happens in the short term, such as the Indian courts overturn the crypto exchange ban at the moment. Otherwise, we'll have to wait until the BitCoin ETF potentially gets approved on the 24th of February 2019. On the technical analysis front, short term we saw there was a strong buy signal, mid term a buy or sell signal, and long term a sell signal. So my intentions are, due to the overall picture, I think Bitcoin will most likely drop a bit more. As such, what I've personally done, I sold off half my Bitcoins into cash. If Bitcoin goes down, I'll gain extra Bitcoins by buying back in, and if Bitcoin goes up, I'll buy back in and make a minor loss. So that is my personal view, and that is what I'm personally doing. And as I said, this is not advice, this is purely my thoughts. I hope to make another video in about a month's time to have a look back and view everything I've said and see how that's gone. As I said, I hope you've enjoyed this video. If you have any questions, feel free to drop them in the comments and I'll reply to you as soon as possible. Thank you. Bye.